Welcome back, everyone. Ready to dive into something pretty mind-blowing.
I think mind-blowing is a good way to put it.
We're talking AI in the world of trading,
Specifically, how it's totally revolutionizing things.
and we're going to get into all that juicy info from Text Collie.
Which, by the way, has some incredible insights.
We're going to break it down for you nice and easy so you can really understand the impact this tech is having.
Because, let's face it, things move at lightning speed in the financial markets these days.
It's like a high-stakes video game.
Uh-huh. Yeah, kinda. And that's where AI comes in, right?
It's like having a secret weapon.
Well, maybe not so secret anymore.
True, true. But a lot of folks still don't fully grasp how these AI algorithms work.
They make it sound like magic.
Right. So let's demystify it a bit.
Perfect. Think of it like this. You've got these super smart computer programs.
Algorithms, right?
Yep, algorithms. They gobble up massive amounts of data.
We're talking mountains of information.
Exactly. And then they use that data to make split-second trading decisions.
Way faster than any human could.
Oh, absolutely. Like, we're talking milliseconds here. That's one of the big advantages of AI in trading.
Speed, right. That was one of the things I found super interesting.
It's a game changer for sure.
And it's not just about speed. I mean, these algorithms are incredibly accurate too.
Mm-hmm. They're really good at spotting patterns, the kind of subtle stuff humans might miss.
Like those tiny little breadcrumbs that can lead to big profits.
Exactly. And the thing is, no matter how much data we try to process as humans, we're always going to be prone to, well, emotions.
Fear, greed, you name it.
All that stuff can cloud our judgment. But AI,
Ice cold.
Huh.
Totally logical.
purely data-driven, which can be a huge advantage in a world where markets can swing wildly.
It makes you wonder, could AI actually help stabilize the market?
That's a fascinating question, and honestly, there's no easy answer.
Our source mentioned something called the flash crash back in 2010.
Oh, yeah, that was a wild one. Remember, the Dow Jones plummeted almost 1,000 points in a matter of minutes.
Yeah, that was insane.
And while the exact cause is still debated, high-frequency trading algorithms were definitely a major factor.
So in a way, algorithms were partly to blame for that crash.
Well, it's more complicated than that. Some argue that those algorithms, at least in their early forms, were a bit too reactive, too quick to buy and sell based on preset triggers. It created a sort of domino effect.
So it was almost like a case of too much speed, not enough human oversight.
Yeah, I think that's a fair assessment. And it highlights the need for careful design and regulation as AI becomes more prevalent in trading.
It's like you need the brakes as well as the gas pedal, right?
Exactly. But to be fair to the algorithms, some experts actually believe that AI-driven trading could lead to a more rational and efficient market overall.
Interesting. So how do they figure that?
Think about it. AI removes a lot of the human biases and emotions that can drive irrational market behavior. It's all about data, logic, and probabilities.
So in theory, AI could lead to less panic selling, fewer market bubbles?
Potentially, yes. Of course, it's not a guaranteed thing. AI is a tool, and like any tool, it can be used for good or bad depending on the intentions behind it.
Right. It's not like AI is going to magically solve all our financial problems overnight.
Speaking of different uses, I was fascinated by the whole idea of algorithms analyzing sentiment.
Sentiment analysis. Yeah, that's a pretty wild one. Imagine AI scanning news headlines, social media posts, even online forums.
Wait, so they're reading our tweets to decide what stocks to buy.
Well, it's a bit more complex than that, but essentially, yes. The algorithms are looking for patterns in how people are talking about certain companies, industries, or even economic trends.
That's crazy. Does that even work? Can you actually predict the market based on what people are saying online?
It's a relatively new approach, and the jury's still out on its long-term effectiveness. Some early studies have shown promising results, but it's definitely still an area of active research.
It makes sense, though, right? I mean, the market is ultimately driven by human behavior. Absolutely. And whether it's rational or irrational, that behavior often gets reflected in what we say and how we communicate.
So by tapping into that collective conversation, AI might be able to pick up on signals that traditional analysis would miss.
Precisely. It's like having a million little analysts working for you, each one processing a tiny piece of the overall market sentiment.
Okay, so we've talked about speed, accuracy, emotional detachment, and even this whole sentiment analysis thing. But what about the predictive power of AI? Text Collie mentions that a lot.
Right. And I think it's important to clarify that we're not talking about crystal balls or seeing the future here.
Yeah, no time travel involved.
Exactly. It's about using data to make informed guesses about what might happen next.
Educated guesses.
Exactly. So, for example, an AI could analyze a company's historical earnings reports, news coverage, even weather patterns that might impact their supply chain.
And by crunching all that data.
It can try to project future earnings and potentially future stock performance.
So it's less about magic and more about recognizing patterns that humans might miss.
Exactly. AI is really good at spotting those subtle correlations and anomalies that our human brains might not pick up on.
It's almost like having a superpower. And according to our source, hedge funds and investment banks are already taking advantage of
Oh,
this.
absolutely. They've been early adopters of AI in trading, and they're using it to gain an edge in the market.
It makes sense. They have the resources to invest in this kind of cutting-edge tech. But it's not just for the Wall Street elite anymore, is it?
Nope, not at all. AI in trading is becoming increasingly accessible to everyday investors.
And that's where robo-advisors come in, right?
Bingo! Think of platforms like Betterment and Wealthfront. They're using AI to offer personalized investment advice, create diversified portfolios, and even automatically rebalance those investments as market conditions change.
So basically, anyone can now have access to sophisticated investment strategies that used to be reserved for the super wealthy.
That's the idea. And it's a pretty big deal in terms of democratizing finance.
No more needing a personal financial advisor who charges you an arm and a leg.
Exactly. Robo-advisors can provide similar services at a fraction of the cost.
It's amazing how technology can level the playing field like that. But it also makes you wonder, what happens when everyone has access to these powerful AI tools? Could it create new risks or challenges?
That's a really important question, and it's something we need to think carefully about as AI continues to evolve.
What kind of risks are we talking about?
Well, for one thing, there's the potential for increased market volatility if everyone starts following the same AI signals. Imagine millions of algorithms all making the same trades at the same time.
That could cause some serious swings, right?
Absolutely. And it could even create new types of market bubbles or crashes that we haven't even anticipated yet.
That's a sobering thought.
It is, and it's why it's so important to have open and honest conversations about the potential downsides of AI, along with all the exciting possibilities.
It's not enough to just understand the technology. We need to understand the broader impact it could have on society as a whole.
Exactly. And that includes thinking about the ethical implications of giving machines more and more control over our financial lives.
Wow, we've covered a lot of ground today. From high-frequency trading to sentiment analysis to the potential risks and ethical dilemmas of AI, it's clear that this technology is already having a major impact on the world of trading.
And it's only going to become more influential in the years to come. As you continue to explore this topic, think about the questions we've raised today. How do we balance the potential benefits of AI with the need for safeguards and responsible development? How do we ensure that AI is used to create a more equitable and sustainable financial system for everyone?
Those are great questions, and I think it's important for all of us to be part of that conversation as AI continues to shape the future of finance.
Absolutely. The future is being written right now, and it's up to us to make sure it's a future we can all be proud of.
I think that's a great place to wrap things up.
Thanks for having me. It's been a fascinating discussion.
Until next time, folks, keep exploring and keep asking those tough questions.